Last week, Gary Wagner was eyeing a close above 1262 for gold. What does he have in store this week? We have him up next. Gary, thanks for joining us one day earlier this week since we are headed to Orlando, Florida to cover the International Precious Metals Institute conference as of Friday.
My pleasure to be here as always.
Gary, last time you were on, gold was dealing with a lot of downside pressure and you were looking for a close above 1262. Gold unable to hold that close. What are you now looking for this week?
Yeah, absolutely. What I was looking for was the fact that if we didn't get anywhere near 1262, that we would see continued downside pressure. And the number that we talked about last week, and I believe is still intact right now, is 1232. Now, 1232 is actually a 76% retracement of the $200+ rally we had at the end of last year, beginning of this year, as it went from, 1181 to 1391.
Are you sticking to the 1232 level? Have you readjusted?
Well, it's not so much that I'm sticking to the level. As an analyst and a technician, we're well aware of that the market's going to do what it's going to do regardless of what we want it to do. But I look at certain benchmarks and numbers to determine areas in which we might find support, we might find resistance. The number 1232 comes in a short-term as well as a long-term Fibonacci, and the key to 1232 is if it holds, it tells us one thing. If it does not hold, my fear is that they might make a play for that double bottom at 1181 because that's the next level of support. My sense is even if it went to 1181, I see that support holding. I think that that's an absolutely critical level, and 1141 is a 61% retracement of the entire rally from, say, 700 up to 1900. And that's why those two numbers are so important.
So, Gary, is it a correct statement to say, look, the gold bears are in command here?
They're in more than command. They're running the show. They're selling the tickets. Absolutely correct.
Now, Gary, on Wednesday, as you know, we had a downbeat ADP report come out. Everyone eyeing Friday's jobs reports now. Do you expect the impact of this report to be positive or negative for gold?
My gut is telling me it will be neutral to possibly a little bit bearish, since that's been the tendency. And so even if it's a neutral report, the fact that the bears are in control will let them run with the ball a little bit. So my sense is that we could see something neutral to bearish. The other thing is that, especially with the numbers lately, there's so many revisions. It's the revisions that I really look at because they're really a telling sign in terms of what actually happened as opposed to the initial report.
All right, Gary, let's get to your segment today. What have you brought us?
Well, today's insert is going to be talking about the numbers that we've just discussed, 1232, 1141, 1181, and by looking at the charts, really show the viewers of Chart This why they are important to the market technician right now.
All right, let's get to it.
Traders, on today's insert, I want to spend a little bit of time and go over some critical numbers, levels that we would need to see it hold in terms of support, where we currently peg resistance, and realize that the numbers that we're looking at are, for the most part, Fibonacci based. Now, many technical analysts use Fibonacci retracement as part of their arsenal and use it very frequently. Why do we have so much weight in this particular study? For those that are unfamiliar with Fibonacci retracement, just a real brief tutorial should catch you up. Simply put, in terms of Fibonacci retracement, that is derived from a particular sequence that is the Fibonacci sequence or the golden ratio. And all it is you simply take the first number and then add it to the second number. So your first is going to be 1 plus 1 equals 2, and then 2 plus 3 equals 5, 3 plus 5 equals 8, and so on. It will continue to spiral, as you can see here. 8 plus 13, 21, and 21 plus 13 equals 34. Now, why is this number so very important, and why do so many technical analysts put such weight on it? Well, first of all, it's a naturally occurring pattern that we find in nature, whether it's how flowers form or any component in science, you can find these numbers at the core or the root of the mathematics behind it. And the interesting thing is when you look at the relationship between any two of these numbers, in other words, between 5 and 3, or 3 and 2, or 8 and 5, the relationship or the distance, the difference between the two is always the same. And it is based upon that we get the number 61.80 or 61%, because the relationship between 34 and 21 is 61%. 21 is 61% of 34, and so on. So it's a naturally occurring sequence found within nature, identified in mathematics, that technicians have learned to apply to the trading of equities and commodities. Now, what you'll find is that in a market that is trending, it typically trends where you get your rally, you get some sort of correction, and then you continue in the rally, which will break to a new high above the previous high. And that's really the definition of the way that you stair step up in a trending market. Now, as the market's retracing, in other words, after it has hit the high and it's beginning to come down, we look for certain areas that we can look for potential support in the market, and those are your Fibonacci-based resistance numbers: 23, 38, 50, and 61 and 76. Now, on a typical retracement, and I don't know that there's such a thing, but generalizing on a retracement, you'll see it go anywhere between 38 and 61%. 61% really, any move beyond that, and it's not a basic retracement. In other words, it doesn't define a bullish trend. If you have the market go up to a certain point and then correct more than 61%, what that's telling you is that any kind of rally that you witnessed, in a bear market, that is, you're probably looking at what we call a counter trend. So the fact that this market broke through 62, that was why that number was so important. Now, this, of course, is on a very, very short-term basis. The next real number to look at is going to be 1232, and that, again, will come up in a different set of Fibonacci retracement numbers that are based on a different time cycle. And to that end, I've gone ahead and pulled up a weekly chart. And on this weekly chart, you can see different Fib retracement levels. The beginning point is different on all of them. You simply look for the 0, the 100s on the bottom, and then they all peak at this record top, or just above 1900 per ounce. One thing I look at, and for viewers who are familiar with chart, this is what I call harmonics. In other words, areas where you get these different time cycles giving you a very, very similar number. You're getting that right here. 1312 was a very, very important number because it showed up in 3 of the 4 retracement cycles that we looked at. Once it broke through there, the next real level that we see in this market is 1230. Now, 1230 is a 50% retracement from this move here, meaning roughly at about $500 all the way up to 19, and that's where you get this number. So we had 1232 come in on a short-term cycle. 50% is showing us a very similar number. In other words, we get our harmonics there, and that's a pretty critical number. That's why it has been my belief that if the market's able to hold 1232, we probably are looking at some sort of a bottom. If it does not, the next real and only level I believe it can go to is to retest this double bottom. Of course, here is that double bottom right here. 1167 is a number. You also get it at 1170, so you get this harmonics right in here. And we know that the low was 1181 just off of that number. So for those of you who would like more information on the topic, what I'm going to do this week in terms of bonus content is, if you go to Chart This After the Show, you need to be a member. Membership is free. We will offer you a seminar or a very, very short discussion on Fibonacci itself, Fibonacci retracement, as well as a detailed technical analysis describing these techniques. That was in a webinar that was recorded a little while ago, but all of it still very relevant. Goldforecast.com, click Chart This After the Show, and that's going to allow you to sign up for Chart This After the Show membership. Again, Fibonacci retracement, and why it's so critical and important in terms of finding support and resistance levels.
Gary, as always, thank you so much.
Absolutely, my pleasure, and I want to wish all of our Chart This viewers successful and prosperous trading over the next couple of weeks, and we'll talk to you real soon. Bye-bye.
Thank you, Gary, and thank you for watching this edition of Chart This. Next time we'll see you, we'll be in Orlando, Florida, covering the IPMI conference. We'll have lots of great coverage for you. In the meantime, you can email us at newsfeedback@kitco.com. Thanks for watching.